Hi, my Bitcoin followers! Price protection for BTC using logarithmic regression. So, do you wonder what the price of Bitcoin and Ethereum could be in a few years' time? Or about their maximum price after a major rally or possible floor price during the depths of a bear market? We can actually look at past data, fit some fancy lines, and try to extrapolate information about what the future could hold by using simple regression in Python. So, in today's video, we will be doing the price protection for BTC using logarithmic regression. Without further ado, let's begin. Make sure you enable all notifications on our channel, give this video a thumbs up, and don't forget to subscribe. And stay tuned for the hottest secrets and information of Bitcoin. Logarithmic transformation is a convenient means of transforming a highly skewed variable into a more normalized dataset. While modeling variables with nonlinear relationships, the chances of producing errors may also be skewed negatively. In statistics, the logistic model is used to model the probability of a certain class or event existing, such as pass-fail, win-lose. Logarithmic regression has been fairly useful for helping us navigate the price movements of Bitcoin. The fair value logarithmic regression trend line was instrumental in establishing the accumulation zone. And the upper logarithmic regression line basically told the price of Bitcoin that it would not pass. Now that Bitcoin has cooled off, we take a pragmatic look at where we currently are and discuss why a consolidation phase is not a bad thing for Bitcoin, with the idea of ultimately moving up to 100k Bitcoin. If you zoom out far enough, the Bitcoin chart looks like this. You could simply draw a straight diagonal line through the data, linear regression, and come to the conclusion that the price is always going up anyway, right? So if you look closely at the log chart of BTC versus time, you might notice that a better fit might be of the form y equals log x. This is what it looks like if you don't remember from school. While the shape of the graph might be similar to a simple log function, it needs to be shifted and scaled in a way that fits our data best. This can be done by using a line in the form of y equals a.log x plus b, where x is time and a and b are arbitrary constants. We can try to find the best log regression curve by solving for a and b on the existing price data that we have. We can use Skippy to do so in Python. Note that we are trying to fit the log of the data on the y-axis, hence need to exponentiate it before displaying it back. From this, we can see that the logarithmic regression line fits the data pretty well. But if you look carefully, a lot more time is spent by price towards the bottom, and a lot less time is spent during the mania phase at the tops. Price moves up and down very rapidly after consolidating for long periods of time. What if we want to find the best fit line for what is often called non-bubble data? Non-bubble data is data that only includes price during consolidation phases and can be used to show the fair price of Bitcoin over time. The regions marked in red are the ones chosen for including in analysis, and the rest are excluded. This is where the price of Bitcoin has spent the most time. The logarithmic regression line naturally shifts lower and tries to fit the non-bubble data. Note that the regions I have chosen are arbitrary, and you can choose to include or exclude different times depending on what you define as your bubble data. This gives the following graph. Here, the x-axis is number of days since Genesis block. The important thing to note is the way to get non-bubble data. Also, the data is not used in subsequent sections. Now, on its own, this graph doesn't show us much apart from confirming that the price does follow some sort of logarithmic regression. We can, however, make it neater by adding extensions above and below the line to see how price has moved in bands over time. At first glance, it is easy to notice that the price seems to be following some kind of log-based function, but we can derive some more insights. We can see that through 2012 and 2013, the price touched the lower bound of the clay-colored band multiple times, with the prior top extending into the orange band. It seems like during every market cycle bottom, the floor price is shifting one band higher while the top is not reaching as high as before. Of course, that could change, but the fact that the floor isn't so low anymore points to a decrease in volatility over the last decade. An interesting thing to do is to extend the regression bands into the future to see theoretical boundary values at certain points in time. Here, I've extended the bands until January 1st, 2023. Note that this chart is based entirely on values till the current day, and with each day's data added, the values will change slightly. If we assume that the market cycle could be coming to its absolute top around January 2023, a maximum price as per the base of the green band is $266,000. A more realistic, although unlikely, as peak target is close to $100,000. The exact same thing can be done for Ethereum too. The non-bubble data is not marked, but it simply fits some regression bands. The same interference can be applied over here as well. As you can see, a maximum price of $19,000 is not out of the question if the top is close to January 1st, 2023. A floor price of $2,500 is very close to the current price. Also note that if a bear market extends beyond the start of 2023, the floor will only increase in value. We were successful to a good extent in predicting Bitcoin prices. But, in general, this will not work well in the real world. This is because history might not repeat itself. Also, new factors affecting Bitcoin's price can come into play with time. It was still fun predicting the Bitcoin's prices. The charts are not 100% accurate, but I just want to give some morale boost for those who always think that Bitcoin is going to zero. Bitcoin will never go to zero. It has over 1 million subscribers, and there are more than 50 million people who own at least some Bitcoin, so it's not going to zero. The user base will just keep growing until everyone also has some. Make sure you enable all notifications to our channel. Give this video a thumbs up, and don't forget to subscribe. And stay tuned for the hottest secrets and information of Bitcoin.